There we go again. So 6 watching, there we go. So let me just start off this morning at saying it's extremely sad to hear about Charlie Kirk. And he may not have had his political beliefs, but anyway, taking somebody out, killing somebody just for the sake of their political beliefs, and a man who agreed and lived his life engaging people in open conversation, honest communication. You may not have agreed with him, but he had a noble way of approaching a problem. Let's stand and talk about it, debate it. For somebody to be that angry and kill somebody for what they think and what they feel and what they want to express and what they're willing to debate with you is so wrong in so many ways. Violence never solves anything, especially political violence. It's so sad. So my heart goes out to Charlie's family. It's a sad day for America. So that said, what I see in the markets this morning is, let me get back to that daily again because my sound was off. If we can get above this imbalance right here and find some support at that, I'd like to see that go higher, dig into this wick. We say that 50% of the wick is sitting right here. And looking for it to push higher and see if we can get through that wick. On the 3 hour candle, we're looking for it to close above the consequent encroachment, which should also be this premium level right here. And catch that for a run higher. And we want to see this 4 hour get taken out to the upside. If we can use the 4 hour to leverage higher, then that'll take the 50% of the wick. 50% of the wick. And start looking for the highs to get taken out for the rest of the week. But we're going to start climbing above this level here. And I think we'll accomplish that once we get through this 3 a.m. candle. If we use Mark's 3 a.m. candle to leverage higher, there's lots of support on higher time frames. For the 1 hour, all I've got for the 1 hour is this busy here. We've now closed above it. Come back, find support at that at 9:38. And there's an institutional order flow entry drill. I'd like to see that continue to push higher now. And yeah, this last up close candle, its mean threshold also lines up with the consequent encroachment of the 4 hour candle. So we'll see how that acts there. We've got to run above the high, come back, found support at the consequent or the mean threshold of this candle. And we're looking for it to continue going higher. So ES is taking it higher. It changes for me if we start drilling back into this candle. If it starts rolling over and getting back into this candle's wick, and 50% of it, then we're looking for another run down into this SIBI down here. I don't want to see that candle's mean threshold get closed below that zone. Dow Jones. And they're all sideways. That's the daily. Good morning, Hadi. You got both of you on this morning. Hadi and the bench trader. Is your bench trader Danielle? Is he going at this before he's off to school? Daniel's going to be a killer trader. It's going to be, I can just imagine what he's going to be like. So British pound, we're in sideways in a British pound. Oh, he's in school already. Oh yeah, I don't know what you're 2 hours ahead of us down there. Hour ahead of us. Oh, look at that drop. Caught a run up to here. Caught this little reversal here and ran it to the high. There. Took this one to here. And then this one I got out there. And now she's headed deeper. Deeper, lower. Bitcoin. You ever run above the highs? Body runs above the highs, comes back, retests them. Look for continuation and a finish or a close of this. Busy on the side, so 160 and 184. So 160 and 148. There's a little dyslexia for you. That would be my next upside. Good morning, Ollie. That's the 4 hour you want to see get taken. Right now we're bouncing off this little breaker. If we don't reach that, we got to get through this breaker. So this obviously has to be the next bull trap we need to break through. If we don't, that rolls over. We take out. It would have to come back through this level, through this mean threshold of this candle, and take out this civvy. You start coming lower. But again, that's a 4 hour chart, so it's quite a ways away from a 1 hour perspective. Oops. This candle's got to close above here. Keep hitting this rejection block here. We're going to get above this busy here. You'd have to see a market structure shift first before I start thinking about going lower. Dean Hawks is now on top of that premium box we've been aiming for a couple of months now. And more upside all the time we can stay above that busy here. If we can stay above here, that looks good for continuation. We'd have to break this little structure here, get through this, and then you're aiming for this one here. So you can see your first market structure shift along with a confirmation to go lower into this SIBI here. If we break here, look for this. If we break this, look for this here. So more upside for the biggies. We're still bouncing off those sticks and sugar. We're down to a discount box here. We've gone from premium to discount in live cattle. Let's see if we start eating back through this candle again and we end up getting a new price leg lower. I don't know where that's going to go for live cattle right now. And then we're getting a reaction off this this 4-hour candle. This discount box on the 4-hour. Coffee sideways. Disney failed to get up into our box here. I don't see anything down here other than it's all downward candles. You got a busy price imbalance below you here. And then all this gap. So you're just past the midpoint and you're on the bottom half of that 4-hour. I think it's a 4-hour. Yeah. If we use this gap as support now to come lower, look for this area right here. See if we can get through that level. If we just bounce off of that and start taking out this busy. So we're between this one and this one. Equal highs above you and equal lows, relative equal lows below you. And a new gap down here, 110, 27 to 111, 10. I'll put that one in there as well. Crude oil's heading lower. We were talking about this morning. We'll see if we can come back into this consequent encroachment of this candle. Close below that. Look for a retest of here and go lower. That's making a lot of assumptions about Mark's 3 a.m. I still don't know all his rules. I don't know if he's going to work on that for us. We're just going to have to come up with our own set. So until now, or for now, let's go with a 4-hour chart and see where we're headed. We're inside this big box here. You've got a change in direction on the 4-hour. You've traded back into it. You've come lower. You've taken out this bearish order block here. Now, if you trade back into that, level at 63.03. Looking for a continuation on the downside, and I'd be looking for 62.65 to 62.75. Oh, it's already hit 62.75 right there. So that's already hit that civvy. So now I want to see if we start to use that as support to continue to come lower and start digging into 62.14 is your next objective. So we start to climb back up through here. Look for a run back up into 63.20 up here. Start breaking this stuff. Look for a run up into this premium box up here. Kamal, good morning. Gold side. Let's look at a 4-hour on gold. So gold, now that we've traded below this level, I want to see gold drop now. Here's my objective for gold. Come on. So that's what I'd be looking for down here for gold. We get back through this mean threshold, or we start to use this BISI as support to come back into this range. That 63, my line in the sand for me would be right here. That'd be the line in the sand for me to go too high. I just want to see it tap this, roll over, and keep coming lower. So look for your confirmation on your lower time frames. So right there, we'll put you right back into that hourly. You want to see this bull trap hold price. They can squeeze all the way into the mean threshold of that. Wow, the consequent encroachment of that wick. I guess it could wick above it all the time. We're staying below here. We're coming lower. So that's what I'd like to see there. It's not doing anything. New York open. Let's get back over here. It's cleared out some liquidity. Don't chase it. Don't chase it. Let's see, come back and retest this right there. Then go higher. It's at this order block. Keep going. Keep heading higher. Mean threshold of this candle's the 5 and 7. They've always swept all the lows already, so I want to see if that keeps pushing higher now. CPI. You can get beat up in CPI, so don't chase it. Where are we? 8:30 head D on this one. There's that mean threshold we were looking at, 974. You want to see that get broken? Found support at it. I think it went higher. There's the 4-hour mean threshold we talked about, or the consequent encroachment of the 4-hour. It hit it and found support there and went lower, or resistance there and went lower. We ate all the way through here. So I don't see any bullishness just yet, clearly. That's the support level you want to see hold price if you were trying to stay bearish. I think you just got to wait on some higher time frame confirmation so you can chase this 1 minute up and down with a lot of speculation for the CPI numbers. It's like Michael said in the past, not even he can pick the directions on CPI. So there's some heavy manipulation going on. So just wait for you get to be until you 9 o'clock or so. Wait for a macro to begin and see where it starts to level off. So discount box. Ignore this initial run on this wick. If we get through 896. And then get to 905. 896, 905. Got to close below 896. Yes, I agree with you, Kevin. Let the dust settle. Patience is the key today. Ollie likes to wait till 9:50. It's good sound logic. Wait till 9 o'clock. So there's the 8:30. Next thing is your 9. Your 9:30. Ooh, my goodness. And then we'll see if the 9:50 macro, 10 o'clock, gives us anything we can trade. They missed my resting sell. The rally order. Waiting to buy crude. While that's still bouncing around, let's all look at Bitcoin again. looking for that 62.67 to 62.75. We already got. So 62.67. We have lots of little new day opening gaps, fair value gaps, all sitting inside here. So looking to see if we can test inside that level. For oil, and I want to see if this holds and we get a retest of this order block here. And then the roll over and go lower. There's that level we were talking about. If you don't want to see it close, I'll move here. Don't even like that wick. So let's run back through. It's got to close below here now on a 1 hour chart. So we got 17 minutes. You don't see that pull back. Preferably below 36.63. Then take out 36.60 on a close, find support inside that, and then start running lower into this gap below us. If we close above this candle and above this level, then I'm looking for another return back up into 36.86 to 36.90. Morning, Rez. See if that holds price now. We go lower. See if this kind of rolls over here. If we push higher, look for right there. Right. 687 and 695. I want to see if that holds price. It takes us lower. We get the next price leg lower. Oh, he's taking the long right here. There's a nice little retest. You're in your breaker now. Looks like a D took this trade here. Right here. Goes to above, tap, go. He's risk-free. Looking for a premium. This is on the 15-second chart here. Bit sloppy in there, a D. Yeah, 15 seconds, not clear either. But you do have it on a 1 minute, and you're at or near premium. You're already well inside that range, man. I hope you're paying yourself. Okay, this is annoying the crap out of me here. So I love you guys, but I can't keep getting a million notifications. So I'm going to turn that off there for a second. Mute for 8 hours. Mute. I got you on my phone. I'm constantly down here clicking the reversal. So keep this in mind, if you're catching this run, and you know this already. So I'm just going by this little range right here. You're catching it at a discount if you're getting in here. And you're already up to 62%, 70% optimal trade entry right off that premium area here. So pay yourself, pay yourself, pay yourself. And now you've got to change your direction and you're right back to your entry point, right actually underwater here if you haven't already paid yourself. So kind of keep that in mind. You got to get above here if you want to continue going higher. So take profit model 1 inside there. You're back inside this discount box again now, and you have to change your direction. So right here, you want to see it get through that level. If you want to see this keep going higher. And then you're going to take out 956. Yeah, it's just the 2 a.m., 4 a.m., 2 a.m. Yeah. Okay, but you look at this one here. It would have been nice if we would have just tapped it here. This whole drive through screws things up, and that's your CPI number. So once it's settled down here, I want to see it get through there for me to be bullish now. You can be bullish, but you got to break that level now. I'd like to see a nice clean touch of this. The fact that we whipped through there throws everything off for me. And again, CPI numbers, so you could be right. I could still be going bullish, but it's going to break this little high that was created right here at 8:30. It's got little PDAs. So if your shirt's going there at 8 and you're using that hourly as your support level, then that's awesome. I just hope you didn't take it before the CPI. I'm just going to wait for it to break market structure first. Yeah, it's already above that level at 2 p.m. candle. So it is doing it is, and it did come down and tap it, but now that we ripped all through, this is where it just wrecks it for you, right? So now I've got to wait for either a retest of it again after this candle or a close above the need threshold of this last up close bullish candle. In other words, this has got to break to the upside for me, market structure shift. They've closed above or like originally on that 956 I was calling. We're literally sitting on it, so I want to see that close above there. It's still holding. I like that we're waking through it though. My entry on the 15-second. Nice work, Adi. It's a nice little trade you got there, D. It's a pretty bold entry. Pretty solid. This is your 1 minute. That works quite well as well to your option trade entry reversal. Break market structure to the upside. Come back, find support at it. And now I want to see it get through that level, and it's not. But 956 is holding. So I want to see this level here. Support. If you're going to go higher, you want to find support inside here and push higher. At least the midpoint of this candle right here. You don't want to see that get taken. If it does, then I'm looking for another run into the mean threshold of this candle and potentially a run lower. And here's the great thing about being in a choppy kind of market. You're going to be careful. Again, I got to close above 956 for me. Morning, Shepard. How you doing, buddy? Six a.m. candle is buried inside. This level here. Yeah, I don't see anything in here of there. Now we finally closed above that level. Let's see if we can get an entry in here at, yeah, there's an entry right there. Away from market structure. So looking for this to go higher here. Now you found support at this. I want to see that go higher here. You got to incorporate all of this from here to here. And then that one is that immediate rebalance right there. So that's what I'm looking at for support. Keep coming higher. When you're watching this candle come back in here like this, it's done its thing here. Get out of Dodge. I don't want to see it keep coming back and revisiting it, because then you get into that high resistance stuff again, and it's just not worth it. So I want to see it accelerate through this rejection block now. See how it just goes up, tries to get up there, and then fails? You don't want to see this. Move to the sidelines and wait. Or if you like to, you don't mind, you got a higher time frame objectives you can hold on to. Like we've broken this candle's high now. We come back and tap that. That would be a 5-minute long. Right there. I'm going to go along there off the 5-minute. Stop loss will go just below that low. So using this whole candle as stop loss. I'm looking for that to go higher. And if it takes out this high, I'll go to break even because I don't want to see it come down here again. It's come down to that candle. You want to see it leave from here. And if I lose the mean threshold of that candle, I'm looking for a revisit in here. So glad you're hanging in there, buddy. That's rejection block. I'm not letting it come back down here. To me, there's no reason it should just keep bopping around inside here. So it's going to cover the cost of the trade. And we'll see if that carries up. It's supposed to keep going though. Too much waffling for me. So on the 5-minute chart, it's still good. I just don't like all this. So next would be the 948. So what I mean by if it just comes down, taps it, you want to see it just accelerate and leave here. If it's got intentions to go higher, and let's just move it, then you want to see it just tap that and go. The fact that we just come down and keep drilling into this candle, there's the mean threshold. That's it. Right there. If it starts to wick through that, I'm looking down here. Imbalance, price imbalance, immediate rebalance, incorporate them all. That's your go, no go zone. Shade it through it, tap it, go. It's not, keeps working its way into it. If we lose that on the downside, look for a return on your 5-minute into this level down here. We're through the mean threshold of this last down close candle. Immediate rebalance, retest. Looks like it wants to come lower. We get through there, so we're through the mean threshold here. If we take this here, we're back into a bearish run for now. And that would take this mean threshold out. So then I'd be looking for a definite run into here. See how this mean threshold was taken? We traded back up into, I wanted to see this imbalance right here, or this immediate rebalance. That got tested. Now I want to see this low get taken here. Start to move into a bearish run. Again, not getting bullish until we get back above here and wait for that market structure shift above you. Looking for a short. Who's looking for a short? Good call. Good call. Look for a short underneath here. Don't get your fingers dirty. Crude oil still digging down into these levels. Russell, you still watching this? Is Russell in here? When we're talking about it, taking that change on the hourly, 4 hour, here's your hourly here. There's your change in direction. Come back inside it, go lower, take that low out right there on a close. Then you're looking for this market structure shift. So now we've got a market structure shift. The downside, 5-minute chart. Here's your silver bullet time. Premium, discount. Change direction. You come back into your discount and you're running from box to box trading. Run all the way up into the box, reverse. You see this change in direction here. Body trades below it. Trade back into it. Now we go lower. Look for this level here. We trade through it. Now you're looking for this to get retested or this low to get taken on a close. Then you look for the wick, mean threshold, the close, and then back into here. So you get a close below it and it trades back into the low. Sorry, this right here is the bottom of the city. Rolls over, comes lower. So institutional order flow entry growth for the those who are looking for this side for continuation. You trade back up into this. You don't get through it. You just get a wick into it and you roll over and keep coming lower. So those are all your support things you continue to see on the 5-minute chart there, Russell, if you're watching. And this is still not acting like a fun place to put your money. See that gold came all the way back up into that level, ran down, and we're looking for range extension, and it just popped through it right there. That's the range extension. One tick, a couple of ticks below that low. Now you got another change of direction. If we get a body back above here and through this level, I'm looking for the next level right here, and then that busy on the upside. I'll put that in there just so we can see the levels today. That's good advice there, Ollie. Stay out, man. Oh, I smell coffee. Someone's up. I smell coffee from the basement. Oh, the coffee. So far, not getting my fingers ready for anything. 15-minute fair value gap. I don't see anything worth playing in here. You've dug into this once. You're digging into it again. That's not a good sign. So you just want to see it tap the high or the open. The fact that we ran through all three of them in one candle tells me your ass is next. We're looking for a rundown here. Let's just wait for 9:30 and then see what happens for the macro at 9:50. Do you have the patience to wait till 9:50? And we finally broke 1,240 people. So welcome everybody, 1,240 people. It took us a long time to get the last 10. I tell you. I think we were sitting at 1,230 for like a month, 2 months. So it looks like we picked up at least 10 more people in the last couple of months. You see how this body is getting real close to being closed below here? It's an important little data point there. If we start closing below it, then I'm definitely game for another run down lower. Or not. So it's still a bear trap until proven otherwise. So you're still in this bullish kind of area. So until it breaks through here on a close, relatively bullish, I'd say. We have lost the main threshold, so that does take me lower. And it has. So you've lost the mean threshold here. You've hit the rejection block. You've come all the way down into rejection block, taking out this little low here. So in terms of consolidation, it's got to keep coming lower. So you've got to break back up through this immediate rebalance here, get back up on top of that, and look for a continuation on the upside. So just wait to see if it closes below here. We're using this first presentation for a value gap. See how it's just being worked from below. So you start to tilt the tables towards bearishness. Good morning, Reese. What else have we got going on here? 15-minute. $15-minute is this level right here. It's got to hold this immediate rebalance right here. I see that. And it's holding, which is this area here. Let's see how many times we've drilled through this mean threshold of this breaker. It's holding. That breaker's still holding all the way down to the wick. So you'd have like one tick. The stop loss originally was down here. But you see how you'd be underwater, waiting in here for the open to push price higher. Got to hold price. So really you're stuck in a slightly bullish stance still to go higher. And on a 1 minute, teasing you to go lower. And you got to get lower as soon as we get below here. So this is a run on liquidity or run lower. Once you take out that mean threshold, you want to run lower. You're into the rejection block. That's how you pay yourself. Lows taken, taken again. And now we see if we get back through this level, find support at it, get above it, and then get above this level right here, this immediate rebalance at 958. Sorry, 959.25. Now for Mark, he's closed above that mean threshold or the consequent encroachment of the 3-hour candle. So he's looking for a long if we use his rules. And that he's changed a few of them on the 5 minute as well. So you're traded, you're closed above. So he's expecting to see this keep pushing higher, I think. So we are slightly bullish. And you're hanging on by your fingernails here at 939 for at least a while anyway. We're above that level again now. So we closed above, give it a little tap, keep pushing higher. Let's take out this 959. Still not above 959. Highs taken, reverse. Equal lows below you. 8 more minutes. Morning, CJ. Here's the recap here. Run above, come back inside. Come on, you gotta accelerate. You gotta start getting higher now. Don't roll over. Keep coming. This is gonna be those little teasers to come down and then shoot it straight up. That's what everybody's hoping for. Oh, let's hope the bus loads up. It's bullish, but just barely. It's hanging in here bullish. That's bullish. That's bullish. That's bullish. Gina with the coffee this morning. Ooh, I'm so excited. Thank you very much. I love the coffee. Oh, yes. Well, I hope you're right, Didi. So far, I'm in the bullish camp. I can't deny it. I'm in the bullish camp. We haven't broken that. We haven't really broken a body below here. We've had some terrible, ugly looking wicks that are still supporting price. We're above that level, so let's see what we get here for 9:30. The 6 a.m., you keep saying the 6 a.m. fair value gap. A 6 a.m. fair value gap. On the hourly? Are you talking about the hourly? This one here? Yeah. Yeah, I agree with you. That held price. It didn't really hold price. It came back during the wick and killed everything. So to me, that's not a valid area during the wick. Clearly would have taken everybody out there. So I can't call that a valid spot because you would have been trashed on it, right? And we never came back and retested it. So to me, the 6 a.m. candle failed. It didn't get supported. It failed, unless you just look at the body. But the wicks did enough damage to tear out everything. So you can't use that as a support level during that particular time period. And then I don't see anything else after that other than maybe immediate rebalances or something. Oh, sorry, that's the hourly. Sorry. Let me have a look at your 6 a.m. here. This one right here, yeah, not valid. It is not a support level. You did not find support at that level. You ripped right through it and it took out everything. Your stop loss would have been sitting here. So that's not a valid area. You can't say after, you can't form fit it after the fact when it clearly got ripped through and taken out, as long with the stop losses as well. And we never came back to retest it, so it doesn't get a validation sticker for me. If you look at this candle, after the run up or run down, clear everything out, or this order block coming back to retest it, yeah, I would say, yeah, there's the 6, what is this, the 4 o'clock, 5 o'clock candle. We come back and retest it as a propulsion candle to go higher. But see, even here, that doesn't validate it either because it ripped through there. So this whole candle here pretty much invalidates anything below us here. So that mean threshold, you got to take that for the upside for confirmation for me. And if you're still holding it, then I'm not going to argue with you. But for me, that's not validated with any rules down here that find support because of that wick. So I like what you're looking at, Adi, but I don't agree that that's those are support levels. You're still finding support here. You're still finding support here. I like that. Continuation. Look for that high to get taken. Look for this threshold to get traded through. And then I'm back into, now I've got validation areas that find support. This isn't validation for me. So you're in rejection block now. Watch for stage 1 delivery. Oh, Ollie, I want this all to work out for you, man. You guys are seeing stuff that I see it. I see some small stuff here, but if you guys are happy with what you see, then stick with your models, man. Run with it. I love it. I love it. Takes out the high there. I want to see this rip for you there, Ollie. Get your 1-stage distribution level. And I hope yours works out, Hadi. I hope it rips right for your levels, man. There you go. Come on. See how he took out the high, closed above it, come back, give it a tap, go. I'm still not taking it. I can see it going higher. Good. Catch the bus. Go on the run. Don't chase it now. If you haven't taken in, if you're not in with those guys, don't chase it. They're running for the all-time highs. Oops. You get so many. There's the all-time high right there, lingering at 069. .069. Come on, you guys. I want you to get it. Get at it. Oh, don't thank me, Hadi. You called it, man. If you're confident about your level and it's going in your direction and you're happy with that analysis, then you don't need to thank me, man. I didn't agree with it. But it's panning out for you. Watch for the next level for me is rejection block at 0.004. Double A full. I'm not on board, just watching. CPF. You're not in this, Ollie? I thought you'd be in this. Man, they're pushing this freaking Tai Chi stuff a lot. I keep seeing that pop up as a commercial. See, this is not very clear price action, eh? Not very clean on a 1 minute. Look at that regular trading hour gap down there. Just saying, come on down and pick me up. Don't take out the highs. Come back and get me. But I want the highs that get taken so the boys can strut around the house in their peacock mode. Like, I knew it. I want you guys to get that. And so far, it's looking good for you. I like it. I like it. I like it. I hate all that side to side stuff, though. Not clean for me. Need to close above the big run, above here. On the hourly, you're saying, hey, Hadi? Because you got 1, 2, 3, 4, 5 levels to run out. I have my rules, no trade till macro. Rules protect capital. I've been wrong and stung so many times. I need the rules. You know, that's awesome, Ollie. If you can hold out, so I'm saying I'm going to see your rule is when CPI numbers are out, just so I'm clear. If your CPI numbers are out, you don't trade at least until you look for 950 and on, right? Is that correct? The 910 from yesterday on a 5 minute, he says. Look at the 950 and look at the 925 candle, the 9 o'clock candle. Overlap, overlap, overlap. So you'd have to get above 904. Remember I was saying I want to see 904 get taken? It's not. Look at this big badass slap you in the face long. All you long guys are getting your butt slapped right now. You don't have your stop loss tight, boy. She's coming back against you hard and fast. Be careful. Be careful. And this is where Ollie goes, I know. This is why I've got rules for 950. Yeah, that's right. CPI and NFP wait for macro, or even 10. They can really play you. Yes, I agree. Exactly. Yeah, I thought you'd get at least rejection block. So you're back into this breaker again. And again, I'm looking for this to get taken on the downside. You're still bullish all the time you're staying in here, but breaking market structure, or sorry, immediate rebalance. You've ripped through all that. You've come back to your first presentation fair value gap right here. Now if we come back, tap that, roll over and come lower, or you run through it to see it go higher. So watch this level here now. This is a CAM model 3 forming here. Consolidation, price leg takes it out higher. Look for 50% of that leg, and I bet you I wouldn't be too surprised. Yeah, it's probably a little too high, but let me just see here. Let me just see here, a CAM 3. It is right on the Beezer, right in that first presentation fair value gap, 968. I'm going to put a little line there. I just want to see if this pans out. That's for a CAM 3. CAM 1 here, CAM 2, CAM 3. Completely long that. Like I can't deny there was a lot of opportunities or a lot of entry points in there, and there was still bullishness. I didn't like this stuff, but it's still bullish. You still can't argue the fact that it's bullish on this level. It did take out the highs, so if you're following the rules completely, you're bullish. You guys don't get upset with your bullishness. Maybe overreaching your PD arrays. Just look for each PD array, pay yourself, and keep your stop loss tight on the way up. And there's nothing wrong with reaching for those higher time frame PD arrays, but make sure you're protecting yourself as you reach each subsequent PD array. Like in other words, this level, we're aiming for that level. You hit it, pay yourself, move to risk-free trade or whatever. Because if it turns on you, like there, it turns quick. So what you want to see now is this low get taken. Now we're tracing back into this. I want to see this keep coming lower now. This is a CAM 1. Come lower. Pay yourself at that low. Move to break even. Quick. It's just because things chopping up. Here's your discount box down here. You're moving into that now. Pay yourself there. Internal range liquidity is what we're looking for here. So until we can get through 903, then you're looking for banging around inside this range. So I want to see this get taken on the downside on a close and then look for a run below the low. So CAM model 1, pay yourself at the low, move to break even. If it comes back against you, you paid yourself right away. You're through this BISI on this side. You're into here, pay yourself. 1, 2, 3 levels of pay on the way down. I like that rule, Ollie. I think I'm going to try to commit that one to memory. Please remind us of that on CPI days and NFP days. Don't take anything until the macro. I like that. It's a good call. So looking for right here, 903. So now your stop loss, when it went into break even, look at this candle here and look at this here. See how you've taken these lows? So you look at this as the potential turn, and that is the bull trap that you want to see it get broken for the upside if you want to retrace back into here. Okay, so that's your target. Internal range liquidity, there's your first presentation for value gap target. So you watch here. If you close above it, come back and find support at it. You're looking for this mean threshold to get broken to the upside, and then we're aiming for this piece up here. So just kind of watch that. And that's why you got to kind of hunt for quick liquidity. Oh, the rule, Shepard, is if there's a CPI number, wait for the 950 macro. In other words, 950 to 1010. Look in there for things to kind of settle down. So if you got the CPI numbers at 830 or NFPs at 830, wait for the 950. His rule is wait for 950. I think, correct me if I'm wrong, Ollie. Wait for the 950 macro before you make a decision to enter into a chart, just because of it can switch up on you so quick, right? That's what, so write that little rule down and go back and back test it. Look at all the times CPIs occurred and how crazy and unstable it can be, and then see if 950 is it starts to mellow out after 950. It could be a pretty solid rule for you, right? You're welcome. And just, Ollie, is that correct? Just to want to make sure that I'm giving your rule the right voice. So there's your discount. I'm pointing with my finger. Here's your discount box. So premium, you don't really, all you got is immediate rebalances here. Yeah, we've got a retest of the CAM Model 1 entry. CAM Model 1 continuation down to here. That might be below 50%. I think it might be above 50%. So it still is a valid trade for a CAM model trader. It is. Oops. There's 50%. So you trade below this level. You come back into CAM Model 1. You're above. You're in the premium. You want to sell it at a discount, aiming for this target. Offload it. That works. Small trade, small little win. That may be all you get in days like this. But if you're waiting for 950, we're going to wait right another 4 more minutes to see what we get. That's right. Even 10 a.m. is sometimes gets reversed between 10 a.m. and 10:04. It's just a day to be super careful. A lot of manipulation going on. I totally agree. So we close back above here. Keep your eye on this level up here. So you can see how this staged or scaled out, pay yourself 1, pay yourself 2, pay yourself 3. You didn't get the 3, you did get the 2. And if you're moving yourself down, a method is if you move your stop loss down to the previous pay point, And if you don't reach it and it comes back and takes you out, at least you got paid on the way down and it came back, took you out at profit, and then went against you. And you got a support level here you want to see supported. If it doesn't, gets broken. See how we've traded above that level, tap it, now run for this level here. So this all was called before it happened. We saw this fair value gap forming in here. We talked about this. If we trade through that and we get a chance to tap it and go higher, you want to see that one give way. So that's the bull trap. It did close above it. Now we've come back and tapped it. Now we're looking for this level. That's exactly what we talked about before it went there. So now you're looking for this level right there. That's just staying on the horse. Internal range liquidity hunt. And that's, again, another layered response to how you get out of that trade. You're doing an internal range liquidity hunt. You're doing a there's 50%. See how we traded above this level? You come back in, you're in a discount. You get to 50, take half off, pay yourself. Move to break even. You hit 62%. Now you're at 50. You pay yourself at 60, 62. And the next thing you're looking for is pay yourself at the premium in here, and then 70% optimum trade entry. So if that comes back to 50 and taps you out, you're out. That's it. You just got some quick liquidity, move to the sidelines, jingle the change in your pocket, and be happy with it. So watch, if it comes back and taps 50% here, you'd be out. But you would have paid yourself here, here, and then the rest would have been in profit right there. You're out. You're done. See, there's 62%. That could be optimum trade entry reversal. Come back down. It takes this mean threshold out here. Look for another run back down into this discount box here. We're coming back to this candle one more time. So now just watch. You've got your internal range liquidity. You've grabbed yourself some cash here. Now you're saying, do we break above this to run higher, or do we take this out to go lower? Because right now this is the internal range. And watch the 50% right here. You want to see how it just tapped it and we get a bit of a reaction off of it? You want to see it shoot up in here now. Reach for here. That has to hold here, and you want to see that go higher. If it starts to, now watch the candle. This is when you start to say, I want to see this thing leave. Not start coming back and revisiting this wick and this candle here again. It's got to go. If you're going to make your run higher into the range, into this first presentation, do it here. I'll give you that half that wick. That's it. 25%, even better, just go. So split this into the quarters. Imagine it's got weakness if it can't, or strength if it only holds the 25% of that. Starts to run. Watch the mean threshold here. Has to get busted through now. Push, push, push. That's it. Go, go, go. That's what you want to see. You want to see it leave and accelerate, right? That's it. That's what you want to see. That's what you want to see, my friends. Pay yourself at the high. As soon as it hits that candle, rejection block, whatever, pay yourself. Get in the habit of feed the need, man. I'm okay with the tapping that. Keep coming. Don't come back and revisit this thing. Because you're right in the middle of the range here. You see that? Aren't you happy you paid yourself here? Because now you're getting back to getting squeezed again. Pay yourself, pay yourself, pay yourself. Come back, tap that high. 50% of that wick right there. Not what I want to see, but yeah, it held. Keep coming. Finally, there you go. Finally hit it. Right on the top of it. Right in the 50%. Now you want to see if it gets through it now. That's that watch here line I have sitting right there at 968. Now, if we can get back through here, this is the first presentation, fair value gap. If we get above here, find support at that, I'm expecting to see this candle. I want to see this candle give way so we can get back into a continuation on the upside, rejection block, 50%, blah, blah, blah. All those PD arrays that we're looking for. And then yes, eventually looking for that one up there. So wait to see if this holds, pop through it, keep going higher. For now, for me, because this is in the premium, I want to see that mean threshold. So in other words, I want to see this market structure shift above here, come back, find support at that, and then I want to catch that long from there. Because you're paying a premium, this could just reverse on you and come all the way back down again, and I've got nothing in here that really gives me a bang off point, like a nice solid BISI I can key off of. So otherwise, we've got this first presentation. You want to use that as support. Does that make sense? So you can see how this whole CPI day can be a real manipulation, real kicker. Even though we're looking at some key levels, it's not running quickly to the levels everybody wants it to go to. It's banging off of individual data points, and it's still running them back and forth. So you got to wait. You got to be very patient to wait for your level. So right now, slightly bullish, but no confirmation for continuation. We're just bullish inside this range. So we're not bullish until we get through here and close above this high. Like remain bullish. Otherwise, yes, still bullish, but internal range liquidity. So we're playing in, you're in the premium, so why buy a premium without confirmation that it's going to go higher? Oh, gee, I keep trying to use my screen as a... So yeah, you're still bullish. 5 minute you're bullish. 1 minute you're bullish. I know all of you say there's no clear direction, but so far right now, 15-minute, I don't have anything on a 15-minute, but I do on a 5 and a 1. So we'll see if the 5 and the 1 continue to hold for more bullishness. So now we're above that level. Watch this 15-second. There. More bullish now. Wait for this mean threshold to get closed. There's sensitivity. Come back, give it a little tap. High. Just give the first presentation a little tap right there. That's it. Now you don't want to see it trade back through here. This is the tap and go. If it's acting the way you want it to act, like we talked about here, it's got to tap it and get out of dodge, leave, right? So this has to, you don't want to see it start eating through this. If it trades back through that, then you switch to bearishness inside this range. Overall, you're still bullish right now. So I'm still bullish. I'm still bullish till proven otherwise. Still bullish. Oh, you're in sync with me now. I took this short. Mark's going short. Ollie and I are both long. I'm clearly not in it as well. I'm just playing ride the horse right now. Just an observation sport. It's just a game today of watch. Watch and watch carefully and learn. What is she up to? I like this little level I've marked out here. It's got to get some legs here now. It's got to start moving. I want to see this candle here, this bearish candle. Get up on top of that and use it as support to push higher and take this candle out. Its mean threshold is holding price right now. So if that's the peak, you've peaked out here, and that's reversing, and it trades back below this first presentation fair value gap again, you're back into bearishness inside this range. And this little fella down here has not been tapped yet. So this is potentially the target if we close below here. You'll get confirmation that that's the target if we close below this swing here and take out this candle. But see how the bodies are still respecting it? It's not looking good because remember we wanted to see this hit and leave, and look at this staggering effect here we're getting. That's not what you want to see. And again, welcome to CPI day, right? When you get all this chop going on, they're not acting quick and clean. Be patient enough to wait for your entry. I think it's time for a plum. I'm going to turn my sound off so you don't hear me much. All right, we're back. It could be a 2-plum day, you guys. We got another plum here. Could be a 2-plum morning. Meanwhile, back at the ranch, what do we see over here? The dollar. The dollar, the dollar, the dollar. See how the bodies are respecting this? What's oil up to? Continuation on the downside. The hourly is trucking. All those lows are now cleared. So now you start to say, do we have the potential for the reversal? So go down into your 15 and 5 minute. There's your 5 minute reversal. Or sorry, 5 minute change of direction. We have not got a chance to revisit it yet. So if we revisit it first before taking out the first candle to the left and these three for a market structure shift for continuation to the upside, targeting these equal highs above you. But for now, you want to see it retrace back into this level right here. Damn, what's with all these commercials? That's nice. Change in direction. Get a market structure shift here. Look for a run back into that range or run back into here. So if we get something below here, look for a run back into your discount and look, see if you're 5 minute, and then look for the change in direction again inside this level for continuation to the upside. If it doesn't and just breaks through it on the downside, look for a retracement back into it to catch it for a low for continuation. See how that level's still holding? That level we had outlined there? I want to see that start to really eat through here now. Not just tap this. You want to see it tap it, close below that mean threshold, come back into it, and then start running lower into this box down here. So we have hit the consequent encroachment. We may come up and tap the bottom of it, but I want to see this hold now and look for gold to go lower. See how we went above it, below it, above it? Now you got to wait for market structure shift. Too much shopping around. Yeah, I agree with you, Ollie. Wait for a market structure shift. Happy to sit this one out. Live to trade another day. Have a good one, folks. Thanks, Darren. You're welcome, Ollie. I agree with you, brother. I'm not touching this either. There you go. Get 16 seconds. Get a body trade above that and use that candle as support to keep going higher. There you go. Tap it. Now go. Right there. Right there. Go. You've run out the highs, though. See that? You've wicked through the highs. You come back, tap it. You want to start pushing now. Leave this open. You want to leave it open or create a little fair value gap here. You don't want to see it fill. You've retapped this. Last little tiny piece, I guess they can leave that last little piece open. You gotta get going. Start running higher now. Mean threshold of that candle. Trade back into it. Lovely. Start going higher. Push, push, let's go. Again, I'm not taking it. Even though I'm calling it, I'm not taking it. Not taking it. Just watch it. Wait for this afternoon. Maybe there's something better this afternoon. It's okay if it takes the highs, you guys, and you're not in there. It really is. Like Ollie says, live to trade another day. If it's not acting the way you want it to act, then don't chase it. Don't force your trade. See that? You want to see it tap and go? It's got to accelerate out of here. I give you 1 or 2 candles to play on that thing, and then you got to go. So now that mean threshold, I don't want to see that get taken. This I want to see stay right there. So stop loss would be sitting just below here. I wouldn't want to see that get filled now. And that candle's got to go. If it's strong, it's got to take off from here. If it takes that high, pay yourself, especially if you've just got in here. Pay yourself at the high, move to break even, or sorry, move to just below here, and wait. See, you don't want to see this keep coming back into here. That's just more noise, more chop, more. That's not acting nicely. Date Empire. It's another plum time. You see how that wasn't acting the way you want it to act? The fact that it starts coming back in there, you go, I don't like that. Tap and go. No reason to come back through the mean threshold of this wick. And look, we're right back into the mean threshold of that candle again. We filled this thing. Not good. Your stop loss would be here. You'd be out. You'd be out. That's why it's not acting the way you want it to act. Don't play in it, man. Just avoid the pain. So now you see how we got change in direction. Closed on it, ran into it. You're through the mean threshold of that candle right there. On a close, you're through it. Come back up. Now you're looking for a break down here. They're just not going to let that get past that 4 hour right now. They're really going to slowly work this back and forth. So now this candle's been validated all the way back to its mean threshold at 950. 950 puts us right on this 830 candle again, the open. We see us get below this first presentation again after taking highs. That could be the run you're looking for back inside this range, and you're in this consolidated sideways crap. Just stay on the horse. It's a great practice for staying on the horse and not being committed to making a trade. I'd love to see that rip down now and take out all the lows. All those people who want to go long, just clean them out now. You give them an opportunity to unload and then drive it right back through all of them that are all staged down in here. Right for 11 o'clock. Look at all that liquidity sitting down here on a 15-minute chart. We're going to run back and clean that lot out for lunch hour, and then take it to town after lunch. Take all these people who are expecting those highs to get taken, come back at lunchtime, clean them all out, and then go higher. Because there's a lot down there. And there's a big old box down here. It hasn't even, oh, I guess you have in that thing. That CPI number sure did a number, cleaned out these guys here, hey? That wick, this would have been nice area had that wick not did some damage this morning. So if I ignore that wick now and treat this area like a level it could reach for, or 50% of that wick, that'd be an area to reach for. You're looking at that old 5-minute one way back there, Eddie. Oh, Charlie sent me something here. Oh, Mom and Dad will be happy with that. All-time high for TSX, 29.3. That's good. That's still holding back there. I want to see a big run on that liquidity on the 15-minute chart. So we get below here now. Watch this trade close below here. We have a market structure shift. I can get below here, come back, retest this, and start looking for this discount box down here, unless it runs it right away. Right there. Let's just do one sell right there. Such a delay. I keep thinking it's not going through. I pay it twice. All right. I'm just going to be above the first presentation. This candle, I don't want to see the mean threshold get taken, which is also the opening of this first presentation. I want to see that hold now and come lower. And here's where the wicks can do a lot of damage because it's pretty choppy in here. But pay yourself, move to break even. I'll got one on there anyway, so I can pay myself right there at that low. Now I don't want to see this get revisited here now. So whatever I made there, I'll give back as break even there if this comes back through me. I don't want to see this. Come on, accelerate down to my target and then put my target right here. See that mean threshold getting eaten through now? And I'm just above, it's got me, that evened out. So I wanted to see this hold and come lower. Go back inside this price. That's it. Now that's not acting the way I want it to act. I wanted to see this candle here. Trade below it, trade back into it like there. That was nice. Then when it started to run low, I was like, good, keep coming. Aim lower. And the fact that it started popping back through that mean threshold, you go, no, that's not what you want to see. This candle gets validated when we went below it. And then you want to see low, mean threshold. It's open. It's mean threshold of the whole candle. And it just went zoop, right through it. Your ass is next. All three of them got taken. And so those are really specific data points I was looking for support. So now you're back inside this first presentation again. No body above it yet, so you're still bearish. Still proven otherwise. So if I get back through this candle again on the close, and we still close below this candle here, then I'd look for this candle one more time to get supported to keep pushing lower. Yeah, it's a boxing ring right now, Mark. Keep studying it, you guys. This is where it really makes you focus on data points. You don't have to trade it. Just really focus on these data points now. I want to see it close below here. So I got 4 seconds. Close right there. Oh no, it's still literally closed on it. Come back, tap it. Now come lower. Right there, come lower. Don't go any higher. Just come lower right from there. Keep coming. Specific data points you're looking for. Is that my 969 level again? Keep coming, keep coming. It's good practice. Don't get tired of this. This has got plenty of little places for you to find support. You're just going to get better the more, see, that's just what we're looking for right there. I put one little tick up a little higher than I thought, but that's what I wanted. Ran the low, pay yourself there. Pay yourself there, move to break even. Now I don't want to see this candle here get taken on the down upside. You can come back and give it a little kiss there, but just keep coming. Aim for my little box down here now. If we're looking at a specific range, again, this is where my problem with my stop loss comes in. If I pull my fib from here to here, look at where it traced back to 50%, right? So you can allow for it to come back to 50% and go lower. So I had my stop loss sitting, I think it was just above here. It doesn't make sense. Think about it could run back into this range, at least 50%. So you should be sitting just above 62 or above here somewhere instead of that close. That makes sense that it would come back in there, right? If it was going to retrace back in a smaller range right here, that it would come back to 50%, just pop above it and keep coming lower. So I got to keep that in mind every time I try to pop a little stop loss in there. But anyway, there's the retap right there. I don't want to see that digging in there. What is it digging into? Okay, coming back into here. No, I don't like any of that. Pay yourself at that low. Now you're this range here. It's only that candle left, that mean threshold of that candle right there. And that mean threshold holds. I want to see this one give way and run lower. I'm still looking for this down here. Still looking for the discount. So I'm bearish inside this range right now. If I get through that mean threshold there again, then which happens to be that watch line, get back above that, then I'm bullish. And bullish, more bullish if we get above that as a close, as a break-in market structure and a bull trap. So that mean threshold holding, give way, come on down. There's the rejection. This little swing low here. The rejection block's been hit. Threshold. Hold right there. Keep coming. We're up to this candle here again. So it ate through that one, tap that one. And now watch this. You think, I don't want to see it start eating through this half this wick here. See how that wick's been supported? So you look at these wicks. These are all like little tiny data points to see which one is supporting price and which one is releasing it. Half that wick now. Now you look for half this wick, which is that blue line, which corresponds to the 8 a.m. candle or the 6 a.m. candle. Look at the mean threshold of the 6 a.m. candle. See how these specific data points, you can almost see the algorithm reaching back for these numbers, tapping them, responding off of them. That's like right on the 830. There's that mean threshold again. Now, if we start getting through that, look for this to see if that gets some support at that and start going for the rejection block. And then this little high, and then looking for a run back in that range. So remember the all-time high fair value gap, we still have not put a 15-minute body above it. No rush. That's a D, no rush. There's nothing in here that gives you support to run in any direction. I'm just practicing staying on the horse here. Look at specific data points, that's all. I'm going to give this a little while longer, and then I'm going to be out of here for the rest of the day. I'm sure this afternoon might be good, or Friday. We might get a little decent run on Friday. Disney's reaching into our discount box here. Let's see if we start reaching through that. Put that on the hourly for Disney. Oil. Look at that retracement back in oil, right into that discount box. And we're holding on it right now. That's what we were looking for. Remember we said we want to see a body get down and below this level. Body got below it. Dug down into this deeper part of the range. And now I'm looking for this little retracement into here. So Craig, I don't know if you're still looking at oil or not. You see how that mean threshold right here? Draw it across. Always take this last up close candle. Just test it. Go back and back to it. Don't take my word for it. Just go back and test it. I'm going to put this line right in here, and I'm going to draw it straight across. When you trade back, if your wicks are in there, if you get a body trade through it right there, trades back into it right here, we keep coming lower. That last candle, and I know Michael calls all three candles, all four candles, whatever candle, number of candles that are up candles, that's all the breaker. Absolutely, totally agree. Not that I would disagree with him anyway, but the last candle is the most sensitive, and its mean threshold is that's what I look for right there. You're allowed to trade back to it. This, and then you say, why is it trading back in here again? That's not a good sign. We're in the middle of a bull trap here, and I don't want to see this. I want to see this accelerate out of this premium array right here. See that premium? See how the bodies are fixed right on top of that premium array, and like it's not going, it's not leaving there, right? It's pop, pop, pop. No, it's hitting the rejection block, and it won't go any higher. Then you start to say, if it starts to eat through that candle's mean threshold, it's probably going to run back down into this big old sibby here, right? Or at least retest this old high. So it closes right there, and that's where you start to go, I'm on the wrong side of this, or I have to endure a big, deep run down. And if this is just in a bearish market, it's been bearish for a few hours. If this is just a run back into a bull trap, change direction, on a 5 minute, it comes back into that and it says, I'm definitely going lower now, right? It goes lower and you're in this SIBI now. So you've gone from BISI to SIBI inside this small range. And you go, if we close below this level here, this whole continuation is going to continue going lower. I'm looking for the rejection block, half that wick, half this wick, and then the low, and then looking for it to continue going lower. So right now you're in an area where you're looking for either a continual push through on a 5 minute, you got to get back above 62, 66, or you're going to see 62.48 give way on a close, come back in, give it a tap, and start pushing lower. So that'll put you right in here. There's your discount box. If you run into here, come back, find support at that, push lower, then we're looking for these lows and obviously further. Does that make sense to you guys? Or am I just burning time here? See how this is coming back, revisit. You don't want to see that. You don't want to see that. You want to see it roll over and come back down. This wick stuff, very, very high resistance stuff going on today. Look at that. This has been validated. I agree with you, Mark. You are bullish on a 15 minute. At least that 15 minute is holding. You got validated here above that high and above the close. And now we've come back into the mean threshold. You're finding support on that. So on the higher time frame, yes, I'm bullish. I'm with you on there. You're bullish off of here. Unless there's that big ass wick in there still. No, that's over here. Looking for this to remain bullish. So you're 5 minutes holding. And you just got to start eating through here now. You're still bullish here. Bullish. Bullish. Then you go bearish inside this range. Doesn't mean bearish overall. Just bearish inside this range. Now you're bullish again. And you want to see it close above 988. Find support at 988 and keep going higher. You got relative equal highs above you, and then that 4 hour. So yeah, I agree with you, Mark. You're back in long on crude. Oh, you're really going for it, hey? Be careful. See how the wicks are already down here, Craig? I don't know. You probably hold there a lot longer, and you have a better reason to hold it, but it doesn't feel bullish right now. So just be careful. Have your stop loss sitting like tight accordingly. Otherwise, you could be in a little too early. There's the discount box right here. So you do not want to see it get below here, Craig, on a close. And it just feels bearish now. The fact that you're whittling through this just feels bearish. Be careful, my friend. Be careful. Be careful. Oh, you're in the long term. Okay, that's fine. Hold it. Do what you need to do. Under 65. Okay, do your thing, man. Do your thing. What you gonna do? So we got a body above here now. So you want to see it come back, give this a little tap before taking that high. If it runs through the high, then look for the high as your support. You want to see this stay open. Rejection block. Pay yourself. Still remaining bullish. These three drives, see? 1, 2, 3, 4. The three Indians pattern. I don't know if that's a three Indians pattern or not. Whether there's supposed to be swings in between each one of those, I don't know. But you got these 3 pushes up, 4 pushes up already. High taken. Now I don't want to see it start trading back through here, finding support at this, because then you're back into this whole switch it up stuff again, right here. So you switch it up, come back into the range, switch it up, come back into this range. You don't want to see that. You want to see that just right there, find support off of that. And what have I said to you about this guy? Look at this guy. Take your mean threshold right here. Last up close candle. You heard me just talk about that. Oops. There is the mean threshold right there. Right there. Look at what it just came down and tapped. Right on precision. Now you don't want to see it. And now watch this candle. You're allowed to tap the top of this right here, right there, and now go higher. That's precision. You want to see it hit a specific data point and go. And watch what it does here. If it fiddles around here, starts banging around off of this guy multiple times, I'm not interested in that. So you've got the high and you've got the open, or the close, I should say. See how it's hit the close? It's hit the mean threshold, the close. One more time down after going higher, the next candle can come down and tap that high. and go higher. So there's the body. Go higher. Nope, not interested. Too much sticking around. Get up there. These are the fundamentals. Can't argue the fundamentals, Craig. I wouldn't even know where to start. Two standard deviations, says Derek. Got to get out of here. Found support at that. At least your mean threshold's still holding. Pay yourself at the high, break even, and wait now. You got a risk free. That's why you'll see how D get to a risk free right away. Once it violates a partial point, you can move to break even and go to a risk free trade, and then expect if it's going to turn on some you and start doing some shenanigans, at least you got a little bit of money out and you got yourself to a risk free situation. And then you watch. You don't have to stress out over whether or not you're going to catch a trade. This could be the start of something beautiful. This could be the start of a beautiful friendship. This could be running higher and higher and reach for the all-time high. But at least you're risk-free now. He's looking for the fair value gap way back there. So all the time you're finding support at these levels, just keep going higher. We've got a fair value gap you see starting to form here on a 5-minute. See that right here? If that holds and does not come back and refill this in the next 4 minutes or so, if that just sits around in here and the next 5-minute candle comes back and taps it, here's your graded response. And you're already long off of it here, and you found support there. You got a perfect entry there for a long. Stop loss will go would originally go just one tick below the important candle because you got way too many here. You don't want to stick it down here. Retest. Watch. If it goes through all three of them, your ass is next. There's one and almost two. Get up there. So now you say, it's already done its thing. It's come back to this order block. I don't want to see this point right here get revisited now. It's got to keep going higher. I don't want to see that. It doesn't need to get down into here again now. It would be the line in the sand if it did, but you don't need to see it get down there. It's come down, it's filled that, rebalanced this area, and now you want to see it start push higher. If it takes out the high, stop loss moves to here. You say there's no reason for it to revisit now you've got here, because now you want to use this candle as support to keep pushing higher. Like that one there, you see it run above it, you can come back, find support at it, push higher. Same with this one. Take out that high, come back, find support at it, push higher. You want to see this act as support. And if it keeps remaining choppy for you, it's up to you to decide whether or not those are clean data points for you to keep trading in. And we're not above that one yet, so excuse me, it's not valid. I know Michael likes to look there. I like a body to get above it. So you're still looking at this one. Remember, the line in the sand is the mean threshold. I do like the fact that this BISI here is being reclaimed multiple times, but we're not trading through it yet on a close. Conservative winds get the job done. All out for the day, off to golf course in the afternoon. Have a great afternoon. See you later, Derek. Take care, buddy. You're very welcome. Sorry we couldn't give you any big fancy trades today, but I didn't see anything that's worthy of any big risk today. I took some hits yesterday, so I'm not willing to take any, trying to be more patient today. Have a great day. I hope the golf course is awesome for you today. You see, like, just see how it's just holding right there on that BISI. Keep going. You want to see it start really getting some candles out of here now. Can you go live every day? Yeah, I go live every day, Mito. We're here every day, man. Live every day. We've got over 450. I don't know how many shows have we done already. I think we've done over 450 shows. We're here every day. See how that high's taken now? Ooh, yeah, baby. Mean threshold. Now this candle's now valid. I like it. This candle's now valid. We validated those. So now these guys, I want to see them act like support. So you don't want to see price starting to eat through them again on the downside, because now this becomes an important level. And then this becomes an important level. So see how it's eating through that? Watch where the body ends. Yeah, that's already eaten through that whole candle. So now you're back into here. Not what you want to see, right? So when it's, as soon as it's starting to eat through that, you go, that's not what I want to see. Where's your stop loss now? See how you've traded below this level? And you've taken out this candle as well. So now this becomes support for price to go lower. So if as soon as you see a body close below here, this now becomes run up, tap it, and come lower. Again, mean threshold of that candle still holding. So you see how when it chops around in here, you just go, this is not what you want to see. When you want to see clean price action, you want to see it tap and go. This whole waffling around here, we're getting into that new macro starting out at 1050. So if this little level right there, precise entry, see how we've gone through it, come back to it, now look for it to go lower. We get a close below that mean threshold again, look for another run back into this range. Mito, I'm here every day from now on. Okay, good, Mito. You're welcome anytime, my friend, anytime. And join the channel. We're on the Telegram channel. When we're not live here, we're live on the Telegram channel. There's always somebody in there analyzing the market, almost 24/7 now. We've got a community of people from all over the world, and we got some really smart people that have some really great trading ideas. And they are, there's people on there to all hours of the day. There's the run lower. See what I mean by specific data points? If you study ICT's principles about order blocks and the levels, the data points within those order blocks, you'll be watching each candle and watching for support levels in each candle as it gets broken to the upside or the downside, depending on what candle you're looking at. And you're looking at that precise level to get tapped and move away, like that level right there. You see, tap it, move away. Takes the low, pay yourself. Not that you're actually paying. I'm just trying to say, think, I'm paying myself. At that low, I'm paying myself. And I get myself ready to break even now. I don't want to see it return back into here. It's done its thing there. I want to see it keep coming, marching lower now. And then I want to see it get below that candle. And I want to see it use it as a buffer to come lower. And if it doesn't, and it goes back through it, or some padding, I should say, not a buffer, but padding to go lower. And if it doesn't, and it starts to eat through it, I go, okay, well, I've got this candle now. If that finds support, I'm back inside this small little tiny range here where that premium box has to get broken to the upside if it's going to go higher, and it has to still find support if it wants to come lower. I'm inside this guy. If I get a body trade below here, I want to see this act like a padding to keep coming lower. Otherwise, you're back to this guy again. See how we're starting? We've eaten through here. We traded below it. You want to say, I want to see no more than the mean threshold get traded into. It went through it. And what are we doing? We're coming back to revisit this SIBI or this BISI one more time. And you've got this breaker, last up close candle, little swing, up close candle that takes out this little, well, it's not really, yeah, I guess you could say it's a breaker if it takes out that guy, that little swing point. Anyway, it takes out that little breaker here that runs price higher, takes out that little high. There's a swing point there. So watch this level right here at 010. If you close above 010, then this is just a tap and go. No body traded below the mean threshold of that candle yet. We had an ugly wick. Bodies are still holding. Get above here now. Change it up and go long again. Not that you're putting a trade in there, but it's got to get above there to go along. If we get a body below here and a body below that piece there, then I'm getting deeper into this range. Yeah, it's macro time right now. The 5-minute chart. Yeah, that's 15 looking good. 5 minutes looking like a potential reversal right here. And we've got the reversal occurring already on the 1-minute chart. It's recurring on the 5-minute chart, and the 15 is nowhere near that yet. But you see how that held? Take out this low. We've not got a body below that level. I like this for a short here. So I'm going to take a short there. And I'm just going to put my stop loss just above that rejection block there. Now I'm looking for a deeper run inside here. Let's use a CAM model or a take profit model 1 for an internal range liquidity hunt. I've only got one on here, so I'm just going to use the internal range liquidity hunt here. So now I'm going to go right there, break even. You'd pay yourself there at 50%. So I'm just going to pay for the cost of the trade there. So that's what we're looking for, a trade below that level, a tap, run to 50%, pay yourself. Move to break even, but I want to give it a little bit more. So if we can get to 62%, then I'll move it to the 50. This is just a quick internal range liquidity hunt is all we're trying to do. Just grab a little bit of change and see how we've traded below this BISI here. Come back and we're just tapping that BISI. That would be really nice if that just kept going right there. It just kept accelerating now. Go lower. Oh yeah, baby. I'll take that. 62%. I'm going to be just above the 50 there now. you'd pay yourself there. I've only got one on, so I'm just going to take. Now, if we get to 70%, I'll move it to 62%. But you would have paid yourself there. Now I want to sit at 50 and give myself my full, follow the rules here. I'm going to be one little tiny iota there below it. Might come back and tap me and then leave. Let's go right there. I'm going to go right there. There, we'll see how we're hitting this breaker right now. Perfect place to pay yourself. Right at 62%. So we would have paid ourselves there if we had lots of trade on, like we had 4 lots, would have been 2 lots, 1 lot, and then it would have come back and tapped us out right there. So I'm going to close my trade there. And that's it. That's it, my friends. That's an internal range liquidity hunt with precision, looking at specific data points. Now, if this trades back against me and runs higher, I don't give a crap. I was on the wrong side of it, but I was on the right side trading internal range liquidity. So anyway, that concludes my little stint for the day. I only took a couple of trades today, but you know, hopefully that made my point. I'm going to get out of here now. So thanks very much for tuning in, you guys. It's coming up for 11 o'clock. Hadi and the boys will be over there on the Telegram channel. Mark took the short as well. Good for you. And I will see you guys tomorrow. Thanks for tuning in. Subscribe and like if you like the show, if you like the detail. And if it looks like we don't know what we're doing because it keeps changing up, it's because the markets are changing up. So we keep changing our mind because we're staying on the chart, staying on the horse. So we're like, now I'm short, now I'm long, now I'm short. So you guys, if you're saying, make up your mind, man. I'm not making up my mind. I'm just trying to stay on the horse. And we're showing you exactly where we're expecting price to get some support on. And we're showing you precise levels we're expecting price to continue going lower. If it doesn't and it gets too choppy, then we're not interested in it. If that makes any sense? Okay. So now it can run all the way through here. I don't care. You've nibbled a piece out of that. You wait for market structure shift now. You can get back into running for this discount box down here. Would be my next target. If there's nothing in here. So we should see this accelerate quickly through this box. It's got to accelerate quickly through here. If you get a body trade above here, then look for a run back up into that premium box one more time. But you're looking at 11 o'clock. I'd like to see it run below this low here. So anyway, yeah, I hope you guys enjoyed that. Again, like, subscribe, and I'll see you guys tomorrow. Thanks for tuning in.